to politics beyond Westminster. We'll put you at the heart of our story. A new start to Sunday.
I'm ready. Are you?
Join me, Trevor Phillips, Sunday mornings on Sky News.
The top business stories live from the Sky newsroom. A shock fall in inflation puts it lower than the Bank of England's target for the first time in 3 years. The Chancellor eyes up £40 billion of tax rises and spending cuts in the budget. Plus, the travel platform Airbnb launches plans to boost its listings using experienced hosts to help manage properties. Very good afternoon. This is Business Live with me, Darren McCaffrey. We're going to begin with that surprise fall in inflation, which had seen it dip to its lowest level for 3 years, below the Bank of England's target. According to the Office for National Statistics, the CPI measure of inflation fell to 1.7% in September. That's below the Bank of England's target, of course, of 2%. Now, that's down from 2.2% in August and a bigger drop than most economists were predicting. And as you can see, inflation was last below that figure way back in April 2021. The latest fall mainly down to lower airfares and petrol prices.
The inflation numbers are good news, and I think, stepping back from the rows that may be there or may not be there over, the uplifts that we're likely to see on pensions and benefits over the course of the next year. I mean, these aren't numbers to celebrate because we've had inflation above target, running at high rates for such a long period. This is, the first time that we've seen a 1.7 rate since the spring of 2021. And as much as, we're talking about what pay and these uplifts are going to do next spring, I think we've got to focus back on the good news, which is that the pressures that households are facing when they hit the shops, the tills, their wider energy bills, it is not as bleak as it was before. So this is good news, and those political stories should take into this good news into context.
News from that expert. Let's bring in another. That is Charlene Young. She's a pension and saving expert at AJ Bell. Very good afternoon to you, Charlene. Let's, if we can, actually just first of all focus on pensioners, because the rate of inflation today is linked to what people on benefits may well get next year, but pensioners are likely to see an inflation busting kind of rise in their pensions, aren't they? Because it was pegged to an earlier figure of inflation. So yet again, they seem to be doing quite well.
Yeah, like you said, Darren. So the state pension is protected by what's known as the triple lock guarantee. And whilst that takes inflation into account, it can, if higher, use the growth in wages. So another figure that was also out this week links to how much the state pension will go up in April next year. Now, we're looking at a rise of 4.1% on the full state pension. So taking that into account, what does it mean? It means a rise of around £473 over a year from April next year. So like you say, many benefits and other things are linked to the rise in inflation that was announced today. But for the state pension, it can benefit from a higher rise if earnings grow faster than inflation.
Yeah, no, I suspect there will be a row and the government will come under pressure to look at where benefits go in terms of how much they increase next year, given how there has been this surprise fall. When it comes to the cost of living crisis that we've been through for the last couple of years, is it now fair to say, Charlene, that that's over, if you like, that, wages have increased quite well recently, inflation is down pretty substantially. Is it fair to say the cost of living crisis is over for most people?
I think it's a yes and a no. Of course, inflation has come in lower than expected, but prices are still rising. And from that kind of higher cost base, if you like, thanks to the inflationary pressures we've seen lately. However, wages are rising faster than prices, which should, in theory, translate to people feeling like they have more in their pocket, like you say. But there's other pressures that people will still be feeling and maybe still looking over their shoulder. For instance, mortgage cost pressures, the fact the winter fuel payment is being withdrawn for some people. So that it's a yes and no from me on that one. And also tax allowances remain frozen. So that drags more people into paying more tax, perhaps at a higher rate, or even paying tax for the first time. So with pay rises versus those frozen allowances, people might not feel as flush as they'd like.
And another group of people who might not feel that flush, because as you say, there always are winners and losers, or potentially savers. And I say that because it looks likely that we're going to see one, if not two, interest rate cuts before the end of the year. And that's bad for people trying to save money, isn't it?
It is, although interest rates might come down, and like you say, a rate cut at the next meeting in November is now looking more and more likely, with inflation coming below that target. I would say don't let talk of lower rates necessarily put you off saving spare cash. So if you're an existing saver already, obviously be alert to falling rates and be prepared to switch to perhaps find a better deal. Don't, whatever you do, leave it sitting in an account paying little or no interest. There's been lots of encouraging work from the regulator, and savers have been switching accounts from accounts paying little or no interest to higher interest accounts, but there's still £250 billion said to be sat in accounts earning almost nothing.
You still there, Charles? We can hear you.
Oh, yes, I am. Sorry. And other good news, ISAs, for instance, we've talked about tax and frozen allowances. ISAs still let you save up to £20,000 a year tax-free, and that includes tax-free returns on cash. So in the past, savers probably have been forced to kind of weigh up a decision between a cash ISA that's historically paid slightly less than a non-ISA cash account. But the good news is those kind of savings difference in rates have started to come down. So savers now are more likely to be able to put away more money and get that interest tax-free.
Well, there you go. Some good news for savers too. Charlene, appreciate your time this afternoon. Thank you very much indeed. Charlene Young there from AJ Bell, joining us from Macclesfield. And you can find out what all this means for you and much more on, of course, our Money blog. All you need to do is scan that QR code that's on your screen right now and find out more about the fall in inflation and what it means for you. Now, we are 2 weeks away from the budget, and apparently the Chancellor's black hole appears to be getting deeper. Rachel Reeves says the funding gap has now nearly doubled from £22 billion to £40 billion. So what's going on? Well, I'm joined by our chief political correspondent, John Craig, who is live in Westminster for this afternoon. Hello, John. £40 billion, a hell of a lot more money. How much is this about expectation management from the government?
Well, the Tories would claim it's because the Labour government is planning to spend far too much. For example, the Tories have today, their spokesman Nigel Huddleston told Sky News, it's all because the government's making political decisions to spend more of taxpayers' money. He gives as examples £10 billion on pay rises for various groups of workers and trade unions. £8 billion Great British Energy, £7 billion on a national wealth fund. Now, this new figure emerged last night after a meeting of what we call the political cabinet. That's ministers without all the civil servants present. And, of course, they were talking about the budget in 2 weeks' time. Now, we're told the Chancellor said that original £22 billion figure that the government's been talking about for weeks, well, that needs to be filled just to keep the public services standing still, Rachel Reeves told the Cabinet. And she also said that the government couldn't turn around 14 years of decline in 1 year or in one budget. Now, this £22 billion black hole has been fiercely disputed by Rishi Sunak and the former Chancellor Jeremy Hunt, who's called it a lie. One wonders what he'd call the £40 billion figure. It all came, of course, ahead of what we thought would be a bruising clash between Rishi Sunak and Sir Keir Starmer at Prime Minister's Questions over the allegations by the opposition that the Chancellor is poised to break Labour's manifesto promise on national insurance contributions. Labour says, we only promise not to tax working people, in other words, employees more. But the Tories are saying, well, it's still a broken promise. Surprisingly, astonishingly, you might say, Mr Sunak chose not to raise any of that or the Taylor Swift brushed by meeting with the Prime Minister that we learned about last night as well. Was this £40 billion figure a cynical move to deflect attention from that? Anyway, either way, we're now told it's £40 billion. The Tories say it's because the government's planning to spend too much. Labour would say, and in fact the PM was talking about at the Cabinet meeting, obviously investing in the National Health Service, other big frontline services. If they are going to plug this £40 billion black hole, obviously they need to raise taxes so they don't have to make swinging cuts in frontline services, and so they can spend more, they would say, on essential services like the NHS and so on. Tories say it's on things they didn't need to spend money on, like big pay rises and some of their, what the Tories would probably call vanity projects like Great British Energy and so on.
OK, John in Westminster, thank you very much indeed. John Craig there, joining us live down the line. Now, let's talk about Airbnb. It's announced plans to boost its listings, hoping to persuade more people to become hosts on its platform. It's launching a campaign to attract local co-hosts to help manage properties. Apparently more than 10,000 people across 10 countries, including the US and here in the UK, have signed up to the service. So what's it all about? Let's speak to Amanda Couples. She is Airbnb's General Manager for the UK and Northern Europe and joins us now. Very good afternoon to you, Amanda. So, in layman's terms, I've read through the press release. I kind of slightly struggle to understand what it was about. Just explain to us what you're hoping to achieve here.
So we know that for many people across the UK, hosting on Airbnb has been one of the best ways to make extra money from their own home. And it's particularly important at the moment with still a very challenged macroeconomic environment, cost of living pressures, etc. We also know that hosting takes time and not everybody has time. So the idea is that we're launching today is the CoHost network, which is a really easy way, if you are a host, to find someone to help you manage all the things that you find difficult about your listing. Co-hosts are just people like you. They are local people who are already hosting on Airbnb. They're experienced hosts. They have an exceptional track record of hosting, and they can help you with whatever aspect of hosting you think is going to be too difficult for you. That might be just, how do I set up on Airbnb and actually get my listing live? It might be, how do I manage taking a booking? How do I talk to guests? Whatever aspect you're struggling with, there will be someone local who has done it before and done it brilliantly who can help you.
In saying that, Airbnb has come a long way from, the original idea of renting out your room in your flat or your house. It's a much bigger operation, clearly, but also means kind of professionals have come in, haven't they, to the market who buy up properties and rent them out almost continuously as Airbnbs. Is this a recognition that actually things have gone a little bit wrong and you need to go back to, as you say, some of those individuals who still take part in the platform?
We see it more as building on what is still very much a strength for us. The vast majority of hosts in the UK and globally have just the one listing. They are ordinary, everyday people. They're people that are passionate about, providing amazing hospitality and showing off the destinations and the many great destinations we have around the UK. Those people want to do more. Professionals, of course, do have a place on our platform, but they're not what our core host looks like, and it's not what the platform's been built for. So what we want to do is encourage more of those everyday people who perhaps are a little bit daunted by the prospect of hosting to effectively team up with someone and work together to bring, their fantastic space. So I think for us, it's really just more of what we do really well, which is to, as I said, help ordinary people earn more income from their homes.
Now, to be fair, Airbnb are doing pretty well in terms of profits at the moment, but have we seen peak Airbnb? And the reason I ask that is because you look at many cities, particularly here in Europe, who are pretty angry with Airbnb, or at least the people who live there are pretty angry with Airbnb, and we're seeing regulations being implemented in lots of different cities. That's going to make what is a tough market even tougher for you guys, isn't it?
We don't think so. We're very pro-regulation. We're big believers that fair, proportionate regulation is absolutely the right thing to do. As I said, people host on Airbnb firstly to earn money, but also to show off the places that are so special to them. And of course, it's really important that you strike a balance between the benefits, the economic, the cultural, the social benefits that hosting does bring to a community and tourism brings to a community, with making sure that, amenities are there and that the fabric of that community remains intact. So we're very pro-regulation. We are regulated in 80% of our top 200 markets around the world. And we, of course, continue to work constructively and in dialogue with local authorities everywhere to make sure that the balance is struck.
But Amanda, do you understand the frustration, as I said, the anger amongst young people who live in places like Barcelona or Budapest or here in the UK in Edinburgh and elsewhere, who feel that Airbnb is preventing them in many ways from being able to afford a home or to be able to rent because many of the properties are effectively taken off the markets?
Of course. I mean, everyone at Airbnb has huge sympathy for young people, old people, anyone who is struggling with housing. I think we can all acknowledge that there are housing crises around Europe and around the world. We're very clear that Airbnb is not the root cause of that crisis. And I think you mentioned Edinburgh. Edinburgh is a great example of a place that has recently brought in very restrictive regulation. We're a year on from that happening. And guess what's happened? Housing prices are still up. Rental vacancies are still very, very tight. And most critically, in the tourism economy, prices have gone up significantly and demand for Edinburgh as a destination has gone down. So actually, that's an example of where overregulation hasn't actually helped anyone in the ecosystem. It's stopped ordinary, everyday people making money from homes. It's stifled the tourism economy and the economic contribution that comes there. And it hasn't actually addressed any of the root causes of, in this case, a housing crisis that this law was designed to address. Okay. New York is a great example.
Okay, Amanda, fascinating stuff. I'm sure there are people who will be watching and disagreeing, but really, really interesting to talk to. That's Amanda Couples there from Airbnb joining us from Central London. Thank you.
Thank you.
You're watching Business Live here on Sky News. We're going to take a quick break. Coming up next, we're going to be looking at those markets. The FTSE up a little today. We'll have all the details in just a couple of minutes. Stay tuned.
I'm Stuart Ramsey, and I'm Sky's chief correspondent.
Enormous explosion that's just come down. I think it was a monster just landed in between us.
Hundreds and hundreds of people hoping to get north, ultimately to get to the United States.
It's a border where they're not welcome, yet they keep coming.
We saw snatch squads going in, grabbing people, taking them out and putting them into trucks and taking them away.
They make about 50 kilos of fentanyl a week. It's incredibly dangerous and toxic stuff.
There's been an upsurge in deaths. The fighting between the gangs is getting more and more vicious.
Is this now all your territory?
Yeah.
The battlefield is outside the barricades, which is over there. This is much more like a normal town. It's really sending a clear message that Venezuela is eager for change.
We're being crushed. Free from wherever you get your news. We are in the middle of a forest, in a jungle really, and they're attempting to keep these men alive. This is real, hardcore emergency medicine. The information on this could bring down the entire network, not just in Iraq and Syria, but across the world. Sky News, the full story first.
Well, hundreds of thousands of people have been using the beast for years to traverse Mexico, but it is really dangerous. Many people have died riding it.
Day of this conflict.
They keep telling us that they want aid.
And this is what's left of it.
Why only in America?
People want their country to work.
Just want a job in a normal life.
Why are these homes empty?
I want you to be honest with people.
That has happened within minutes.
Sky News, the full story first. Free wherever you get your news.
There's always more to the news than a headline. We want to discover, to delve a little deeper, to find out what's really going on. Explanation, analysis, the people at the heart of every story. I'm Neil Patterson, and this is the Sky News Daily Podcast. So, by the end, we'll hopefully all understand what's going on in the world just that little better. Available wherever you get your podcasts.
We've got your Sunday mornings covered. From the front page and the sounds of the streets to the voices of the people who make the major calls and big picture politics beyond Westminster. We'll put you at the heart of our story. A new start to Sunday.
I'm ready. Are you?
Join me, Trevor Phillips, Sunday mornings on Sky News.
Traveling is not just about the destination. It's also about how you get there. Fly Emirates, fly better. Fly Emirates, fly better.
Well, let's have a look at the markets in a bit more detail and the European indices. They've had a bit of a mixed bag again today, still weighed down by those luxury giants who've been issuing profit warnings. The FTSE 100 remained in positive territory, closing up nearly 1%, as you can see there. The big winner today, Whitbread. They own things like Premier Inn and lots of restaurant chains. They're offering dividends and they are up some 6%. The miners have also had a good day. That's likely because of increased demand in China, up across the board there. Outside the FTSE, Tate and Lyle are leading the pack in Europe after it was reported in the Financial Times that Advent International are potentially planning a takeover, up more than 8%. On Wall Street, equities have been a bit of a volatile day. If you look at the tech stocks there, they're down. But the AI computing giant, Nvidia, seems to have made back some of its losses. But Intel, Microsoft, Apple, all down today. And on the currency, unsurprising given the inflation news and the expected interest rate cut, sterling is down both against the dollar and the euro. And finally, a barrel of Brent crude oil is going to set you back just over $73. Well, joining me now is Joshua Mahoney. He's Chief Market Analyst at Scope Markets. Joshua, very good afternoon to you. Let's talk about that big story today, the surprise fall in inflation. How have the markets reacted?
Well, it depends where you're looking, quite frankly. If you're looking at the FTSE 100, it's been a great day, quite frankly. It's been a sea of green across the board, up around 1%. And that flies in the face of what we're seeing elsewhere within Europe. Certainly, it's been a bit of a bumpy time in the US. Opening with some losses, but most notably the Dow picking up a little bit, where we're seeing the losses really being confined to some of those big tech stocks that many of them aren't actually within the Dow. So certainly it's a good news story here in the UK, coming off the back of yesterday's jobs report, where we saw lower unemployment, lower average hourly earnings. Now today we're seeing a sharp decline in both headline and core inflation.
And this is obviously all going to feed into interest rates. One of the reasons sterling's down today. Is it nailed on not just November, do you think, December now, given the news of the last couple of days that you just talked about?
I mean, markets would say so. If you look at pricing for the coming two meetings, we've now got an 80% chance priced in for a rate cut at both of these coming two meetings, November and December. I would say there's probably good reason to be cautious now. If you look at services inflation at 4.9%, that essentially is driving all of the inflation at the moment because goods are in negative territory. And when you look at core inflation, 3.2, still well above that Bank of England target. I don't think we're going to get back towards that target until Q2 of 2025. So certainly good news. And if you compare it to the prior month, we've seen a significant drop on a single month basis. But if you look from a big picture standpoint, it's always been about core inflation for the Bank of England when it comes to their pace of easing. And whilst we have seen a hefty decline for September, it still remains well above its target at 3.2%.
It would be a bit of a surprise, given the recent context, if the bank were to cut interest rates in December. But there is a sense that, as I say, given those figures, it does need to go maybe a little bit further.
Well, I mean, it doesn't necessarily want to look like it's behind the curve. We're expecting to see the ECB cut rates tomorrow. Bear in mind, it wasn't so long ago that we thought the ECB was going to hold off this month because we don't have a Fed meeting this month. We don't have a Bank of England meeting this month, and they don't want to see too wide a differential between Eurozone rates and the likes of the Federal Reserve in particular. The Bank of England don't necessarily want to look like they're acting too late within this cycle. Certainly that happened on the way up, inflation booming before we started to see interest rates being hiked. And so there's always this charge being levied at the central banks that they're too late to react. So they want to be proactive, but they don't necessarily want to see inflation boom once again, because if we see a big pickup in inflation, that could really undermine the positivity that we're seeing within global markets at the moment. So it's a fine balancing act.
And Joshua, very quickly if you can, we've got about 20 seconds. Explain to me why your tech shares down so much in the US today.
Well, look, ultimately within earnings season, we always look for the early indications of strength or weakness within a sector. We saw ASML, which produces a material for the chips, and that was essentially very weak in terms of demand. Tomorrow, we're seeing TSMC, which create the chips for the big chip makers. So another potential indication of whether we're going to see strong or weak earnings from the likes of NVIDIA.
OK, Joshua, as always, thank you for your time this afternoon. That is it from me for today. I'm back tomorrow at 11:30. Matt's up next with the News Hour. Stay tuned.
I say, bring it on.
With America divided and tensions running high, get ready for an election like no other.
Join our teams as we follow the campaign trail as America decides.
We will win, win, win. Get closer to the action this US election with full reaction and analysis.
Sky News, the full story first.
The most significant day of this conflict.
They keep telling us that they want aid.
And this is what's left of it.
Tanks, heavy vehicle. Why only in America?
People want their country to work.
Just want a job in a normal life.
Why are these homes empty?
I want you to be honest with people.
That has happened within minutes.
Sky News, the full story first. Free wherever you get your news.
It is 5 o'clock. I'm Matt Barbett. You're watching the News Hour, 60 minutes of news, analysis and interviews. We begin right now with the top stories this hour. Hope for homeowners, chances of interest rate cuts grow following a shock fall in inflation. A 7-year-old boy has died and several people are in hospital after an explosion at a house in Newcastle. Sudan famine, we report from the war-torn country on the millions who are facing starvation. England's new football manager Thomas Tuchel says he's excited and honoured to lead the men's team as the FA reveals it talked to 10 people about his job. Here's what fans think.
I think he'll really do us well in the tournament stages.
Every job he's had, he's been sacked. So I've not got a lot of confidence in him.
It could work. It could lead to an English World Cup.
Plus, Indiana Jones and the Temple of Doom. What archaeologists have discovered at the world-famous site of Petra. Good evening, thanks for joining us. We begin with potentially good news for people paying the mortgage. There are increased hopes this evening of an interest rate cut next month after inflation fell by more than expected. The rate has eased to 1.7%, dipping well below the Bank of England's target of 2% for the first time in 3 years. It is down from 2.2% in August. Analysts had expected a fall, but only to 1.9%. Today's 1.7% figure for September